Hi and welcome to the Market Alert for Tuesday, the 8th of February 2022. So Bitcoin bullion surge, stocks purge as EU credit crisis risk re-emerges. Is peripheral panic about to cross the pond again? If you're not scared here, Lagarde lets Europe genie out of unintended consequence bottle. If you are not scared here, it's because you have no experience and have not experienced what could happen before. We're talking about the blow up in the Italian, Spanish and Portuguese bonds yesterday. Going back to the pigs of 2013 is what it's talking about. And then this chap here, Jeff Currie, interesting that he should make an appearance. I have never seen a market like this. Goldman shortages of everything, you name it, we're out of it. This is a molecule crisis. We're out of everything. I don't care if it's oil, gas, coal, copper, aluminium, you name it, we're out of it. Apart from silver. He didn't mention silver, and that's because this man, this one here, came out last year and explained how they suppressed the price of shorting the silver price. So that's why that one is missing off here and is also 60% cheaper than it was 42 years ago. So this is the man behind the manipulation, along with JP Morgan and Bank of America. There is no news today, no economic news. The market's going to have to make its own direction at the moment. It's to the upside, and the gold-silver ratio dropped yesterday, but is now making its way back to the upside. And speaking of shortages, the Baltic Dry Index continues to fall off a cliff, with the shipping of goods drying up once more. So let's have a look at the markets. We'll start off with the Dow. I'll just pull that one up for you. So we can see that we've been sideways at the 200 MA for the last couple of days. Holding above this at the moment. Very, very quiet overnight. Like I say, no news today, which leaves the market free to move to the upside, but failing to do that, of course. And we get a bit of a sell-off if the bond issue continues in Europe. Then watch for these levels on the downside. On the upside, well, we've got the 5-bar moving average, the 50 MA, and then the 78% retracement. But we'll also have, if I just do this for you, from this high to this low, this set of fibs to the upside as well. We're actually below the 38 at the moment here as well. So, yeah, you'll need to take that one out as well. So let's have a look at the 30-minute chart. Yesterday, an interesting one. The market rallied, came back, then went up to the Friday high, and then immediately sold off as well. 100, 200, 350 points, and then overnight the market's just been very, very quiet. Very strange indeed. I mean, that's a massive bar. What time was that? Just at the up to the close. So in the last 30 minutes, a lot of selling took place in the Dow there. In the German DAX, again looking weaker, but that's probably due to the German bonds. But a quietish day yesterday as well. Not a big range compared to previous days. So calming down a little there. We are overbought. We've been moving to the downside. We found support at the 89% there for the last couple of days. Important that the market holds here. On the upside, from here to here, we've got these areas of resistance that need to be taken out, along with the 5-bar moving average, in order to get prices to move back to the upside. In the 30-minute DAX, if I can find it, it's here somewhere. Yesterday we had a bit of a sell-off to the downside, and then the market found support before making its way back to the DP. And then as we finished at 4 p.m, the market then down and up, and then this smallish bar that was in sync with the sell-off at 9 p.m. in the Dow. But otherwise the market is sideways also at the moment in a shortish range. But if in the smaller time frame, in the 5-minute, you can see that prices currently making their way up after being oversold at the DP level. Crossover in stochastics and a spike in the volumes there as well. So now we've got resistance to the left, and we're still 25 minutes away from the futures opening as these prices make their way to the upside. You can see why we're stopped here at the moment. 78% retracement, 89, and then resistance to the left hand side and off the left hand side of the chart, which is why this is very useful to have on, because you wouldn't know there was resistance there if well, particularly the top one, the other one we can see, if you didn't have these actually on the chart. But at the moment the market stuck at 78% there. In the metals markets, let's have a quick run around. Yesterday, as we saw in the headline, bullion up. We're oversold, so we're expecting the market to be slightly bullish. It's actually managed to bounce off on the overnight. When I looked at 5 o'clock this morning, I was expecting to see a bit more on the downside. I was expecting straight reversal, to be honest, but the market seems to be holding there at the moment. Let's just have a look at this in a bit more detail. Let's drop down into a 30-minute. So yesterday the market making its way up. In fact, yesterday was one of those days where they tried to move the market lower in the open. This red bar here, they moved the market down for 30 minutes and then had to give in and move to the upside. But you can see they've taken advantage of this overnight, brought it back to more or less the same area. Got to get above the DP and take out yesterday's high if silver is to move higher. We're oversold in the 30-minute. We've got divergence in the stochastics, and we've got demand in the market there as well. Bit of a no man's land until you draw in the fibs, and you will see from this low to this high there, we come back to 78%. And let me just add this in here as well. I don't know why this isn't actually on the chart. Let me just change the color as well. This already loads as default on the and let me just change the thickness of these lines so that you can see them. And there we go. So there's all of your resistance areas in the 30-minute. Should prices make their way back to the upside to yesterday's high, I can now see where I've got resistance on the upside, and also support on the downside as well, should prices move lower. But at the moment, finding support at 78%, bang in there, oversold, and divergence, crossover in stochastics, and the momentum starting to move back to the upside. So we'll see how that pans out this morning as well, before we get to the London fix. Dollar trying to move higher there, stuck at 78% as well, has been for the last couple of days. Again, waiting for the CPI numbers on Friday. Brent up again yesterday, and selling off a bit of supply in the market yesterday as well. But it needs to take out the 95 would be the next psychological number to the upside, heading towards that $100 per barrel. And that's just the 5-minute silver there, which we've already looked at in the bigger time frames. Okay, that will do it for this one. That was a quick roundup of what we're seeing in the markets at the moment. The stock markets at the moment looking bullish, as is the metals. How long for, who knows, unless there is a sea change. But like I say, it's interesting that now all of these analysts are talking about shortages, etc., that they still never mention the shortage of physical silver and the price disparity, because it's a monetary metal as well, and that's why. Okay, that's it for this one. I will see you in tomorrow's, and as ever, thanks for watching. See you in the next one.